Which is the best home loan for you? There are four major types of home loans, and most buyers only know about one of them. Choosing the wrong one could cost you money. I'm going to break down each one of these, who qualifies, what it costs, and which one wins for your situation. Bookmark this and share it with anyone you know who's thinking about buying. I'm Candy, and I've been a loan officer for over 20 years, and this is the video that I wish my clients watched before we got on our first call. The loan type you choose impacts your interest rate, your monthly payment, your upfront costs, and how much you pay over the life of the loan. So let's do this right. If this is helpful, please subscribe. I post regularly, and this is exactly the kind of thing that saves homebuyers real money. First off, let's talk FHA loans. This is the first loan that people think about when it comes to first-time home buyers. That's because it is designed to help make homeownership accessible for buyers with lower credit or limited savings. The minimum credit score requirement for FHA loans is 580 if you want to put down the minimum 3.5%. But if you have a credit score between 500 and 580, you might still qualify with a 10% down payment. Now, keep in mind that it is always easier to qualify and you will get better terms the higher your credit score is, but you do have other options. Mortgage insurance is always required on FHA loans. If you put down less than 10%, you will have that mortgage insurance for as long as you have this loan. It does not drop off the way it does on conventional loans. And FHA loans are for primary residences only, so we can't use them for investment properties or for second homes. Now, if FHA is on the table, let's also make sure you're not leaving other options behind. Conventional loans are our next stop. So these are loans that meet the Fannie Mae and Freddie Mac guidelines. There's no minimum credit score any longer, but you're going to get the best terms if you have a credit score of at least 740. Now, when it comes to comparing FHA and conventional loans, anything 640 and below is almost always going to go FHA. Between 640 and 680, we're going to compare FHA versus conventional, and 680 and above, conventional loans are going to be our first stop. So you will have a minimum down payment of 3% for first-time homebuyers or anyone who meets the income requirements. You do have mortgage insurance required if you put down less than 20%, but that automatically drops off once you reach a 22% equity position. This is a key advantage over the FHA loan. And the higher your credit score and the higher your down payment, the lower your mortgage insurance payment. This works on primary homes, second homes, and investment properties. For veterans, active duty service members, and eligible surviving spouses, VA loans are the way to go. 0% down, no mortgage insurance, and very competitive rates. This is the most powerful loan benefit in the market. The funding fee does replace the mortgage insurance, but it can be financed in, and it's waived for veterans with service-related disabilities. There's no official credit score requirement, but most lenders do require a credit score between 580 and 620. If you served, this benefit was earned, please use it. It's estimated that about 75% of veterans never use their VA benefits for this. If you're looking at homes that are in a rural or qualifying suburban areas, let's look at a USDA loan. USDA has a map that we use to check the eligibility of the address, so let's check this before we roll it out. That's because it is also zero down. Minimum credit scores are usually about 640, and there is a stricter debt to income ratio requirement. There are some income limits, and it's approximately 115% of the area median income, and it's dependent on the number of people in the household. Mortgage insurance is also lower than it is on FHA loans. This is one of the most overlooked programs in the country. It is worth 5 minutes to check the eligibility. Now, there are other programs out there that fall outside of these guidelines, and we can always look at other options if you don't think you fit into one of these. One of the options that I always like to mention, because it's my favorite loan type, are renovation loans. Each of the loans we just talked about has a renovation loan component that allows you to finance the purchase price plus the renovation cost into one loan. I covered that in other videos, so please take a look at those if you're interested in buying a fixer-upper. So when we're trying to decide what is the best route for you to go, if you have a 680 credit score and above, we're probably looking at a conventional loan. Under a 640 or limited savings, probably FHA. We'll always compare these regardless of credit because there are other factors that could impact which one of these is best. If you have military service, VA, full stop. Buying outside of a major city, let's check USDA eligibility first. Want to renovate? 203K, Fannie Mae HomeStyle, or USDA or VA renovation loans are the way to go. Some of the mistakes that I see people make are, one, defaulting to an FHA loan first, without checking VA eligibility. Number two is never looking at the USDA map to see if the house you're looking at qualifies. Number three is comparing rates without comparing the total cost over the life of the loan. So, which loan is right for you? Drop your situation in the comments, your credit score, your down payment savings, whether you've served, and I'll point you in the right direction. Or drop guide and I'll send you my free homebuyer guide. It covers all four loan types and talks about everything else you need to know before you start shopping.